Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US Dollar FX for Monday, April 1st, 2013. Well, a continuation of the trend to the downside today. No change of trend technically for the past 3 trading days. Large black body a few trading periods ago, establishing or continuing that downtrend, a candle with a lower high and a lower low. Candle following that was an indecisive spinning top candle, but with a higher high and a lower low. In bar chart terms, an inside day. The next candle, a doji candle that was inside the range of the previous candle, another inside day. And today an outside day relative to the previous candle in bar chart terms. So very much candles of indecision. Does raise doubt about continuation of the trend to the downside, but technically no change of trend from down to up. Although it does seem that probability is favouring a change of trend to the upside. Now, having said that, however, the market is facing very strong resistance at this 128.57 level. And we can see here in the recent past that that level is held as very strong support. So for today's trading, we saw the market test above there and be rejected from there. However, we did see the candle close within the top sector of the range, and it does suggest that the buyers have now taken control of this market, whereas for the previous 3 trading periods the buyers failed to take control. Pretty much neither side had control in those 2 trading periods, and the sellers had control in the trading period prior to that. Now the market has been testing down to very strong support in this zone that extends from 127.50 roughly down to around the 126.50, 126.40 level. So very strong support below where the market's trading, and strong resistance, as I've already mentioned. Combined with that strong resistance close by, there is also just above there very strong resistance at the Tenkan Center around the 128.98 level. So a very strong barrier to this market trading higher too, and that level is coinciding with the swing lows here, where there was strong upside price rejection previously that can now turn into resistance for this market, and just above there very strong resistance at 129.68. So a market that's not going to be trending very freely in the near future, with very solid resistance overhead but very strong support down below. Now in terms of the Fibonacci extension, and remember we are still technically in a first time frame downtrend, and we're looking at the relationship of the current first time frame downtrend to the previous time the market was trending down, and here today we've seen the market testing once again to just below the 100% level and being rejected from there. So this does set this market up for a potential change of trend, with the market potentially making a higher high and a higher low. So the high of the current candle around the 128.70 level is very important. The Fibonacci retracement doesn't really give us any clues. We're examining the relationship of the current first time frame downtrend to the previous time the market was trending up, and we've traded in a bearish manner down through the 100% level. Did suggest potential to test down to the 161.8% level to 127.16. The market has failed to trade down to there, and we're not seeing any strength from the sellers over the previous 3 candles. So this does suggest that there is potential for the market to trade higher. Now in terms of Ichimoku, a bearish market in all 3 time frames. The market's trading down below the cloud, so we have a bearish bias in the long term time frame. The market's also trading below the Kijun Sen, so bearish in the medium term time frame, and that Kijun Sen is flat. And ignore this last section because that current candle hasn't finished forming yet, but for the completed trading over the previous 3 days, the Kijun Sen has turned flat, and price action is attempting to retrace back towards the equilibrium offered by the flat Kijun Sen in that medium term time frame. So there still is a possibility of this market testing up to higher levels based on that. So we are bearish in the medium term time frame by trading below that indicator, but also bearish in the fast term time frame by trading below the Tenkan Sen. So that all of that bearishness is confirmed by the Chikou span trading below the corresponding price action, and the likely scenario here is now that the buyers are in control of the market in the short-term time frame in terms of supply and demand. A test to higher levels, perhaps a test to the Tenkan Sen, the market to bounce off there and test back down to lower levels. But as I've mentioned, very solid support below, so we don't really have a market that's going to be trending very nicely or very efficiently in terms of where this support and resistance is situated very close by to this current trading. We could see a market that trades between these boundaries and congests, and then we will be waiting for the breakout from either side. But really a market to not be excited about. The bias overall is to in the higher time frames to the downside, so we should really be looking for this market to retrace and then bounce back down.